good morning, investor and corporate. Welcome to Set Digital Roadshow third quarter 2022 performance review. This section will run about 45 minutes, including Q&A. Company will start the section by 30-minute presentation, followed by 15-minute Q&A. And during Q&A, investor may leave your question in meeting room chat box or use raise your hand function. We will open your microphone so you can ask the question to the company directly. So may I now invite NR Instant Produce Public Company Limited to start the presentation, please. Thank you very much.
Good morning, and good afternoon or good evening, from wherever you are. Thank you for joining our presentation for our quarter 3 2022 roadshow presentation. Next slide, please. So this quarter it reflects a lot of what we've been working on since actually the beginning of the year, since January. And that's reflected both in a continued growth in our core earnings, as well as reduced losses from some of the startups and joint ventures that we've invested into as they start to mature, as well as our ability to exit some of our portfolio companies. As you can see on the revenue side, and we'll go more into detail later, we've had decent growth of 12%. One of the reasons we didn't grow as much as we had targeted was we also took a more conservative approach towards growth over the past 6 months, rightfully so, just due to the war and the overall macroeconomic situation. We've had an improvement in our gross profit margins. I'll go more into this later, but we're trying to improve our unit economics, as well as increase revenue from higher margin products, as well as from services as well. SG&A continues to increase, and that's reflective of our e-commerce business. That's due to 3PL fulfillment from Amazon. And as you can see here, just from an EBITDA net profit perspective, that's just an overall jump. Overall, from a shareholder perspective, there's been no change since IPO, so we've never sold any shares since IPO. And the key events for this quarter is our expansion of our plant-based food chain, our pet food company, which now is complete and operational, sale of our portfolio companies, and an investment into a leading technology company for decarbonization. Next page. Apologize if my voice is not very good. It's 5 a.m. I'm currently in Riyadh here in Saudi Arabia. I just arrived. Okay, so just so that yeah, and we've done this since last quarter, but just as a nice summary. So we've grouped our businesses into 3 primary groups. They're actually very much interrelated. The left group being our specialty food group, consisting of ethnic food and pet food. Our second group, which is basically e-commerce food tech. This is more focused on brand and distribution versus manufacturing, whereas specialty foods is very much focused on manufacturing. And then climate action group, this is where, we have both our plant-based foods and now a big focus of ours, which is basically our decarbonization or our biomass carbon capture investments. Next page, please. So overall, Basically, we are a vertically integrated climate fighting food company. Okay. And I think climate fighting is very important. Um, Ignoring the black circles for a moment, right? And then let me just briefly describe. So, if you look on the left-hand side, our product portfolio is it seems diverse, but it's not. From ethnics to supplement to plant-based foods, and even pet food. Um, we have a lot of OEM clients from around the world who oftentimes they want us to upsell many different types of products. And our ability to have different products that are in demand is very important. In the middle part, vertical integration from all the way upstream, growing farms to manufacturing, our own R&D labs. Um, this is very important. Allows us to basically control costs as well as add value. And then what happens is that when we go to a lot of our brand partners, our OEM manufacturing partners. What they like is like an all-in-one service. So, can you do this for us? Do you have that? Our KPI for the year is we want 50 new SKUs per year. What do you have to offer us, right? And so that was basically the whole value proposition of our company to our OEM clients. We've now added climate action. And why is climate action important? If on the right-hand side, the race to net zero, carbon neutrality is super important. I'm in Riyadh now because I was at COP27. I was probably one of the only handful of Thai companies there. As all of you know, as institutionals, there's no more no greater threat to humanity than climate change, and also there's no greater threat to private sector than climate change as well. And so the need to go to net zero is very important. Our ability to go into the middle now, our ability to basically go to net zero is based on our vertical integration, and we're going to do that through carbon removal. And in the left hand side, that's where our ability to create biocarbon, and I'll explain more about this in a moment, and generate carbon credits is pretty important towards us becoming a zero carbon company, both at the company level and at the product level. And at the product level, that is the hardest part of all. Next page. So, key development and progress. Uh, um, uh, uh, in specialty foods, we've had a very big focus on brand and distribution over the past 4 months. Um, One of the reasons we did this is um, we wanted to further integrate into distribution. So one of the reasons we got into e-commerce is we did not have our own distribution capability, and it's very difficult for us to reach out to clients if we don't own or we're not strategically partnered with distributors. And so, in the past 4 months, we've been working in the U.S., in China, and specifically in the United Kingdom as well, and Thailand, work with key strategic distributors on how we can push our product out to the market in a way that we can also get data feedback as well. And also in a way where we can improve our margins by selling more profitable products. I think one of the success factors is also now that we're very well distributed within modern trade in Thailand. Um, Can you go back to the previous page? So, also another big part of what we've been doing over the past 4 months is brand. We knew, for example, that due to macroeconomic conditions, the Western consumers would see a softening in terms of demand, and we were rightfully so. So there is a softening in terms of consumers in North America and Europe, more and even more so in Europe. Having said that, the great thing about ethnic foods is we're still seeing consistent demand. There's just a more sensitivity towards price. And so for Western consumers, the great thing is for Western consumers, we're very much private label OEM, and that tends to be the more affordable brand. So we're still seeing consistent demand moving forward. On our ethnic supermarket side, we're still seeing demand moving forward because it's a captive market, and we're also seeing price sensitivity as well as a key determining factor. And the good thing is we are not a premium brand; we're more placed in the middle. Okay, next page. And so, we're very much happy to announce our pet food company now is now up and operational. We did test runs in August, and then we did full run now in September. We'll reach almost 100% capacity in December. That's what we're targeted. And this is despite only being open for a few months. One of the reasons is our management. They're all top level C-level people from pet food companies in Thailand, and we have a very robust and strong pipeline of clients who had orders with us. So we actually, when we first made this decision to invest last year, the order book for pet food was 10 million US dollars. That order book now is more somewhere around 40 to 45 million dollars in terms of pipeline demand. Next page, please. So, what does that mean? That basically means we are now moving up our plans to install a second production line into our factory. So the first stage capacity was 1,800 tons per month. At 100% capacity, that comes out to around $2.5 million sales per month. We're now going to increase that second production line with a higher throughput, which will take us to 4,800 tons per month. We expect that to be complete, including supply chain lead time installation, somewhere by Q3 of next year. Next page, please. On our e-commerce side, we actually have not acquired any new Amazon brands. One of the reasons is we're still working with auditors on adjusting our amortization schedule policy for our acquisitions. So basically, our auditors have agreed to basically have agreed that all new acquisitions on e-commerce from now moving forward will not be amortized. Originally, we were forced to amortize our acquisition in 10 years, which is crazy, right? I mean, you buy a company for, say, $10 million and you have to amortize $1 million a year. So we've got them to change. That change still hasn't taken effect yet, so we've not made any acquisitions until that's done. Rightfully so, we're also more conscious, in any company we acquire, will be very strategic. And one of the most important requirements is these products must be sellable within Southeast Asia. So the focus of our Q3 efforts was really getting the brands that we own in the United States that are top sellers on Amazon, getting FDA approval in Thailand, locally manufacturing them, and distribute them in Thailand. Once we've distributed in Thailand, we expect to expand within Southeast Asia. Our partnership with WinMed, we expect to be in the pharmaceutical supplement space within Q1 of next year. We expect to get FDA approval for most of the products we want to launch this month and next month. Next page, please. Okay. So in climate action, I'm very excited, very passionate about what we're doing here. And so, I don't think I need to explain to everybody the problem with climate change. As everybody knows, CO2 emissions is at a historical high. We're not going to meet the Paris Climate Accord targets of 1.5-degree warming. More importantly, if you think about carbon emissions, 416 ppm in the atmosphere is what we're here today, and it's going to peak at 425. The sustainable level of particulate matter in the air is for carbon is actually 350. And so we need to reduce ppm in the atmosphere to 350. Next page, please. I'm sorry if I'm speaking fast. If I am speaking fast, everybody just holler. I'll speak slower. Just want to get through the whole slides. I know we have very limited time. Okay. And so what is the solution to close the CO2 removal gap? And so, actually, uh, ac- Richard, is your microphone on? Can you mute it? Somebody's microphone is really loud. Okay, thank you. Okay, so the solution for CO2 removal gap, right, is essentially um, uh, a multi-pronged strategy for the world, right? But for us, we've actually, with an investment in what we've been working on for the past 2 years, right? We now have a very clear pathway to enable the world to get to that solution, and it's agriculture-based, biomass, and improves our own supply chain and value chain as well. So, if you look at the left side, all it requires is basically carbon removal credits at actually $100 per ton, and we actually have off-takers for these carbon removal certificates at $100 per ton. I'm super excited about this. The second is it's going to require basically gigaton scale removal. Um, and so I know there's a lot to understand in this slide. So if you just look at the very right-hand side, we've now established a company called 350 Corporation. This company will serve as a holding company for our entire climate action group, and it's going to scale a solution that has co-benefits for the consumer, for the community and the country, as well as enable the countries that we're in to close their emission gaps to on a pathway to 350 ppm. Next page, please. So what does that actually mean? So 350 as a holding company, if you look on the right-hand side, okay, will have three primary strategies. The first strategy is dietary solution. And essentially, this is plant-based foods. And this is not new. This is something we've already had. We're just putting this under the 350 group. Okay. So, from a dietary solution perspective, this is basically about how we do decarbonize consumers. Okay. And the key revenue drivers there are basically branded product sales of products that NRF currently manufactures, is number one. Number two is OEM manufacturing across our plants in the UK and in Thailand, and a manufacturing plant that we have together with PDT Group. Number three is we've actually, over the past 4 months, been working on taking our the know using the know-how, proprietary technology that we have, the manufacturing technology that we have, and then licensing that to partners, to clients on a revenue share as well as a license payment share, a fee basis. We made the decision to do this um, primarily because we feel that there is just too much demand for plant-based products, and we are unable to manufacture everything in the countries that we are in. That our customers are. So we're now looking towards providing licensing and revenue share as well. And in most cases, if the demand is for within our region, we will force them to OEM manufacture with us as well. If it's out of region, they can manufacture it themselves. And we're also starting to do ingredient supply sales in plant-based foods as well, such as jackfruit. Moving to the middle now, I have to be fast because we've got 15 minutes left. Um, our key revenue drivers for nature-based solutions is carbon credits and project management. If you don't know what nature-based solutions is, it's basically using nature to fight climate change. So, for example, afforestation, tree planting. This basically helps at a company level decarbonization of NRF and going to our carbon negative goal. We currently are in negotiations with a swath of land in Thailand, and overseas we've signed LOI with two countries with more than almost a million rai of land to basically plant trees and do afforestry management. On the left-hand side, basically, is agriculture decarbonization. So basically, decarbonization of our own supply chain as well as our partner supply chains. And this is an industrialized solution, building large-scale pyrolysis plants that basically take any type of biomass, converts them into a stable form of carbon where we can basically sequester that carbon into our fields where we get carbon removal or a negative carbon intensity carbon footprint. Next page, please. And so by doing all three of those, we decarbonize our consumer, we decarbonize at our company level through nature-based solutions, and we decarbonize our products through supply chain carbon removal using biocarbon. I want to skip this page due to the lack of time. Okay, and where did we get the technology from to do this? We invested in $4.5 million into a company that got the decarbonization prize from Elon Musk. They're a technology leader in the US, 2 decades. We're about to increase our stake. They have almost a dozen sites that they're currently providing technology to, include the largest renewable natural gas plant in North America, the largest renewable diesel, as well as sustainable aviation fuel. Due to their special technology, which is tar-free, particulate matter-free, to basically create multiple forms of biocarbon from or renewable energy from biomass. Next page, please. We're going to move quick now. Sorry. Yeah, and so their key competitive advantage is this unique technology, and they are a technology leader in the United States. Next page, please. Okay, go back to the previous page. So with Frontline, basically our goal is we're going to basically build a plant in Thailand, and we're going to build a plant in the United States. Currently we expect to be we should be able to announce this sometime within this year, within this quarter. And then what we hope to also take their technology and licensing it to our partners as well in countries that we have no plans to enter. Let's go to the next page, please. Also, from a plant-based perspective within climate action, just due to the very good feedback and performance of our plant-based eatery, we've now increased capital by about 145 million baht so that we can cover all of Bangkok with Alt Eatery. We've also had inquiries for franchises as well, so we're going to look at that once we've done this. We've also signed an agreement with PTTOR to expand Alt Eatery within their footprint as well as sell plant-based foods within their portfolio. Next page, please. Also, I think we're an investor in the fastest growing plant-based brand in America and in the United Kingdom called Wicked Kitchen. We are also the sole distributor of their products within Asia. We recently announced our partnership to sell within Top's Food Hall across Thailand. So it's a mutually exclusive deal. We have 17 SKUs now, going to 30 within next year. This product line is amazing. It's in we're starting off with frozen, going to ambient across Thailand. And the most important thing is they are affordable. They're even actually cheaper than some locally made normal Thai food, even in frozen. Next page, please. So capping off in the key development from a portfolio perspective of the startups, currently there's still most of our startups that we own are still okay from a valuation perspective, except for Future Meat, which we've completely written off now. And as mentioned, we had this in plan since end of last year, and then we mentioned this in Q1 of this year, even before the Ukraine war, that we plan to sell our stake if the return meets our required rate of return, as well as and that was the case for Boosted. We sold our stake in Nove Eats because there was a slight conflict because their QSR and Alt Eatery is also QSR as well. So we decided to sell our stake in Nove Eats. However, we are still a OEM manufacturer of their products, and we also license our technology, as well as we are currently developing new products for Nove Eats moving forward as they grow into the United States. For GTH, we originally invested in the company because we were very interested in hemp protein. Now the market has changed to marijuana, and that's basically outside of the scope of what we are as a company. We don't want to be a marijuana company. So we decided to sell our stake and we got a decent return for it. Next page, please. So I'm going to very quickly go through this. If you have questions, you can ask in Q&A. In ethnic foods, I've kind of mentioned consumers are still okay, just more price sensitive. And so that's why I think we made the right choice, focusing on distribution, working with distributors, and focusing on our own brand, focusing within Asian supermarkets. Within e-commerce, although you might see e-commerce sales within the United States slowing down, I think within the segments that we own, they're still okay. And so we're still seeing consistent single-digit growth performance rather than negative growth, which is okay. And then our primary focus now is taking those products and selling it within Thailand, within ASEAN. Pet food, amazing. We have, like, for example, I mean, demand is off the charts. One of the reasons is our Thai pet food is made with locally produced and grown agricultural commodities such as corn, rice husks, etc. It adds great flavor and it's also cheaper than Western dog food. Hence, everybody comes to Thailand for pet food. We even had one supermarket with 22,000 chains ask us to make product for them, and we're like, "There's no way we can do that. We need to build like another plant, which is like 3x bigger." Anyways, for plant-based foods, even though the whole space has taken a beating from a US perspective, we actually see this as a consolidation phase, and everybody is moving towards rationalizing their supply chain as well as their cost, or unit cost, which means we are an OEM player, and everybody now is looking to OEM. And so we are actually now at the right place at the right moment of where we thought the industry was going to go. Next page. So across people, planet, performance, on our people side, it's about educational impact around climate awareness. We have 65,000 followers now across all our social media sites. We have almost 1 million content views across all our educational content and activities around climate change. 7 minutes left. Okay, I'll be faster. Planet, what you're going to see as we build our our biomass carbon capture plants, this is going to go negative, and our core KPI is we're removing carbon. And performance, we're going to go to that right now. So why don't we go to the next page? Um, I want to skip this and just go to the next page. But as you can, just very quickly, as you can see here from that previous page, okay, never mind. Well, we'll just go with this one. So, as you can see here, from an ethnic food perspective, quarter on quarter, it's grown okay. In fact, I think amongst our peers, we're doing rather well just due to our diversified portfolio. We're actually now making an aggressive push into sauces. And the reason is that we see continued demand for sauces within Europe and the United States, which is why we're building a new sauce plant. Within plant-based, um, it looks like it's negative growth, but actually, this is slightly intentional. We're now actually slowing down our own branded plant-based products that are currently for sale in North America and Europe. And the reason is that we are rebranding into a more modern style of brand. And then we're actually going to now sell all these products into Western supermarkets. So, for example, like a Target or like a Whole Foods or Walmart in the United States, or Tesco's like in the UK, just due to demand. So currently, the brands that we're currently selling now are they look really old school, and so we're rebranding, and so we should be back into good growth within next year, as well as higher margin growth with our technology, our revenue share model. Um, for e-commerce, as mentioned, year on year, it's grown. Um, let's quickly go due to the lack of time. Next page, please. Operating growth continues to grow across every region. Year on year, Asia last year was a bit stronger. This year, it's slightly weaker. Just the only reason is because of China market, as well as certain markets that were in lockdown, and there was a lot of inventory buildup. Next page, please. However, overall, as you can see here, we've managed to maintain our momentum. Um, quarter 1 and 2 tends to be our weakest anyways. Quarter 3, we tend to see growth, and then quarter 4 tends to be our highest growth period just due to the holidays as customers build inventory. So we should see a higher growth in quarter 4. Next page, please. GP, we should see a continued improvement in GP as we try to reduce our costs. We reduce our SG&A as well as we move into higher margin products as well as revenue share. So, for example, we currently don't have manufacturing in the US at the moment, and so we are actually licensing some of our product technology and plant-based foods to the United States, actually. So. Okay, moving forward. Next page, please. SG&A, as mentioned, has largely reflected our increase in e-commerce sales. That's just because of the high cost that Amazon tolls. It's like almost 30%. Next page, please. So EBITDA margin, I want to skip this page for a moment and just go to net profit because it's largely effective. So as mentioned, from a core earnings perspective, we've had very good growth year on year as well as quarter on quarter. And then if you include the sale of GTH, that's even a stronger performance. And so this is a normalized performance, as you can see here, and I think we've done rather well. And actually, when I say rather well, it's actually we're going back to where we were, which is basically we're reducing the losses from the joint ventures and startups because they are now maturing. For example, like we were incurring 7 million baht loss per quarter on pet food. That is now almost at break-even level in quarter 3, and in quarter 3 it's going to be profitable because we're going to be running at full capacity in December, and our net margins is like almost 15%. In plant-based, some of these companies are also maturing as well, so less loss. Okay. And so if we look at the previous slide was normalized net profit, now it's just basically in profit. Is just net profit. As you can see here, we've had fabulous returns on net profit with 3x. Okay, let's go to the next page, please. On a ratio side, I've got 3 minutes left. I think overall liquidity is still good. As you can see here, we're generating good return on equity and assets. I think just given our growth profile and potential on a debt basis, we're still prudently managed. Next page, please. I want to just spend 2 or 3 minutes on next previous page, not yet this page. So I want to just talk about our strategic outlook. Within specialty, we're very much now pushing into the sauce business, and we already have sauce already, but with our new sauce plant, it's going to make us even more competitive, and we see huge growth opportunities within Europe and the United States and North America. Number 2 is we're going to be focusing very much on distribution. We might actually even acquire distribution as well, but specifically in the United Kingdom, because there's such a huge market for Thai food. And despite the recession, we do feel that Thai food is a down trading play for price-sensitive consumers. We're also going to focus on expanding our pet food production line as well as focusing on our own ethnic brands. And then selling that within the distribution channel partners that we're working with, which should have a overall improvement in margins for our company as we focus on brand, focus on working with distribution as well as increasing productivity through our new plans. Within e-commerce, the key focus is basically taking what we have and selling it within ASEAN. And growing it from there and doing maybe strategic M&As. And the last part is on climate action. I know we really haven't a lot of time on this. If you're interested more, reach out to us. We're happy to do one-on-one. I think this is going to be the most important thing that's going to impact our business moving forward. Will be what we do in climate action. So I think time's up now. Within plant-based, we're actually now moving towards hopefully break-even operations and potentially even profitable operations next year. And then also in terms of building our decarbonization plans for biomass, we hope to do that and this year have the plans LOIs in place and then building the plans next year. Yeah, and so with that, are there any questions? I think we have 10 minutes for Q&A.
Okay, the section has come to an end. So on behalf of the Stock Exchange of Thailand, I would like to thank you, investor and corporate, for joining the conference. We look forward to welcome you all again in the next quarter. Thank you very much and have a good day. ขอบคุณค่ะ